Have you ever tried to ask yourself, okay, we're in the middle of a stock market correction here, and then we're getting a dead cat bounce. We're oversold, we're bouncing. Now, how far or how high do I expect the stock market bounce to go? And where do I anticipate taking profits at? Because you're always on edge when the market starts to bounce off of oversold conditions. Okay, how high does it go before we get a little bit of a correction? And so in this video, what I want to do is I want to show you one of the tools that I use to help me gauge or decide where to start taking profits at or completely get out altogether, and then to start reshorting the market if necessary. Now, the possibility looms that it could just go right back to all-time highs. And if that's the case, then you can always get back into the market. That's not a problem. As traders, that's what we're doing. We're constantly getting in, getting out, buying and selling. So that's not a big problem. What you don't want is to overstay your welcome on a market bounce that doesn't intend to go back up to all-time highs, and then you get caught holding the bag. So let's look at SPY here. And we're going to look at a number of different charts, but the takeaway here is to have another tool in your arsenal to be able to use for stock market bounces. And this can also be applied in many other ways. But for the focus of this video, I'm really just looking at the stock market bounces following a correction. So here we go. I use the Anchored VWAP. This is the tool that I love to use for a lot of different things. But in this particular case, I'm talking about Anchored VWAPs, which stands for Anchored Volume Weighted Average Price. It's a mouthful. And essentially what it's doing is taking the average price over a set period of time that the stock is sold at. You can do it on intraday charts. You can do it on daily charts. You can go well beyond to weekly or monthly if you want to. But what I did here, when we started to correct, I noticed we were getting into oversold territory. You can see where we were starting to get really, really oversold. So then I took the Anchored VWAP, and one of the more popular anchors for the VWAP is off of the year to date. So going back to the beginning of the year, you can see where we started to break down below it, and then we popped right back above it yesterday. I got long on SSO, but it also correlates with SPY because it's essentially a derivative of SPY. So it pulls back, it starts to bounce. Now I want to see where's it most likely that the bounce could essentially fizzle out. And so what I do here is I take the AVWAP and I anchor it to the all-time high. And as a result, I now have a range that I can play with. Now, it could go right through this AVWAP, go all the way up to all-time highs, and that's fine. What I would probably have at that point is like a third of a position left or a half a position that I can let run to the upside. But what I want to do, and I've already done some of it, I've already taken some of the profits off the table on this particular trade. So I want to see what happens when it gets up to the 511, 512 area. If it starts to struggle there, I'm going to start taking another third off the table. If it blows right through it, I'm going to let it run some. Maybe I'll let it get all the way up to some resistance here at around like the 516 level and take another third off. If it goes to all-time highs and beyond, I still have a third of a position that I'm still profiting from. But what I don't want to do is not take any profits along the way, not be aware of the AVWAP that a lot of people will use once it starts getting into this area here to start taking some profits. And as a result, if it goes right back down, I want to know that I've already been taking some profits along the way. Now, playing the bounce, it doesn't have to just be off of SPY. It can be off of a myriad of different stocks. So for instance, you take the Qs. A lot of people are playing the Qs right now. Can you do it with the Qs? Absolutely. You can do AVWAP with anything. So where I would start watching it with the Qs is if it gets back up to this 436. You had this huge run, and now if it gets back up to it, and even if it blows back past it, where I would be looking to reshort the market if it starts to struggle again. Let's say we get one of these candles here that starts to sell off pretty heavy. That would be my clue to go ahead and start shorting the market again. That's what I'm going to be doing, at least. That's my game plan. And then you take IWM. You could say the same thing. We got a high right here, a recent high. It's getting pretty close. So tomorrow, if we get follow through to the upside, I'm going to be watching very closely to see what does the Russell ETF do when it gets right here to the AVWAP. Do we start to see it pull back some? If so, because it's the closest to that AVWAP right now than the other indices, that might be my clue for what the others are going to do as well. That the market is very intentional about taking profits and starting to short again at the AVWAP. But what about on individual stocks? Let's take a look at those too. On the individual plays, you have Microsoft. Now, how the heck would you play this one? You have a huge support level right here at this like 398 area. And man, it has been bouncing off of this level for a while now, going all the way back to late January. It's been bouncing off of it. So what I'm looking for here is, can it pull off the same feet again at around this 398 area? It dropped a little bit below it yesterday, but it quickly reclaimed that support level into the close. And that's really the most important thing that we're looking for. How does it close relative to a support level? Because sometimes it'll dip below it intraday, but how does it close relative to it? Then you get the follow through today. Now, you can also apply an AVWAP here if you don't think that this market's necessarily going back to all-time highs. couple ways to play it. This one, you could do it right off of its all-time highs here, or you could just do it off of the highs right before the breakdown. I'm a little bit more conservative, so I'm going to go off of the most recent highs because that gives it a little bit steeper of an angle that I want to be aware of, see how it plays out. If it does break through it, maybe I'll break it back all the way over to here just to see how it handles it from the all-time high standpoint. You can have multiple VWAPs going on at once. In fact, most of the time I'll have 3 or 4 of them that I'm looking at. Another way to play the market bounce is off of Trendlines. So I just showed you a price level support. What about on Micron? Now, the other thing you want to make sure too that you're cognizant during earnings season of when the stocks are going to be reporting, because you don't want to be holding a stock through earnings and you just get railroaded because you weren't aware of the fact that there was a very volatile event happening after hours or before the market opens. So here we got Micron, and you have this nice trend line here. Now, it's not a very mature trend line per se. It's a pretty young trend line because this is only the 3rd time that it's been tested. You know, if you count the first time where it was developed, you didn't even know it was a trend line at that point. Then you got the second test, and then you got this 3rd test. But it still offers up as a decent bounce opportunity here because it's trying to hold off from going into the gap and trying to fill that gap. So there was some interest here in trying to play this rising trend line. Again, you don't have to necessarily be overly bullish on this market to be able to play the bounce. So you have an VWAP, and you can see where it got above it here, but it quickly dropped back down below it, and then it sold off pretty hard. I would be watching and paying very close attention to what it does if it gets back over the 119 level. By that point, you should have some pretty good profits that you can take some of your gains on. And then another one that you can play it on is FDX. This has the VWAP that goes all the way back to February. So consistently bouncing off of it. Then you had this huge surge to the upside, and then it's been pulling back. It was a very dramatic pullback as well. But it pulled back to this VWAP. And not only that, what's even cooler about that is that you can tie it in together with other indicators as well. So for instance, on FDX, you can put a Fibonacci retracement level on it. And so on the Fibonacci retracement, you can say, all right, check it out here where it's pulled back to the 50% retracement level and it's starting to bounce. Overall, pretty good looking chart. It's in conjunction with this VWAP. You got the 50% retracement level. You got clear support level right here that if it breaks back down below the lows from 4 days prior, probably a good reason to go ahead and get out of it. So the takeaway here is not so much to be bullish or bearish. I think everybody says, oh, I'm bullish on the market, or hey, I'm bearish on the market, as if that's like the calling card or the prerequisite to having to make a trade. It's like you can't make a trade long unless you're bullish, or you can't make a trade to the short side unless you declare yourself bearish. But that's not necessarily true. You're really just looking for the next trade. And I think so many traders get away from the idea that really what they're trying to do is make a profitable trade. That's what they're doing. They're trying to manage the risk so that they can consistently profit along the way. But it's really about the next trade. And if you get caught up in it's like, oh, I'm bullish on this market or I'm bearish on this market, just look at what the market's doing next. I was short last week. I'm long this week. You can go back and forth on it. You don't have to be stuck in one direction or the other. You can go with the flow of the market. And you'll find that more opportunities presents itself as a result when you really don't care about what direction the market goes, just as long as you're on the right side of it. If you enjoyed this video, I'd encourage you to like and subscribe. Check out shareplanner.com. There's a lot of cool features there that if you like what I'm talking about here, you can go there and check it out as well. Appreciate you guys tuning back in. It's been a while since I've done one of these, and it was good for me to take a break. I needed to take a break. Doing sometimes these videos, you can get burned out over time, and you really just got to step back and smell the roses, figure out how to maybe make it a little bit easier on yourself, because these things can be time consuming. And as a full-time trader, I like to be able to have a little bit of downtime too that's not caught up in just always editing videos. So I appreciate you guys tuning back in, and we'll try to do these things more consistently and regularly. Thank you guys, and God bless.